Ladies and gentlemen, imagine your family's monthly budget. You get a fixed salary, but bills keep rising. Food, school, fees, petrol. What do? Cut spending, borrow more, or invest in something that grows your income? That's exactly what India's finance minister just did for our 1.4 billion people. Welcome to Bankers Bootcamp, where an investment banker with 15 years in IB breaks down complex economics like you are my 5-year-old niece listening to a bedtime story. Today, decoding India's budget 2026-27, the blueprint for our $5 trillion dream. This masterclass in GRWM for interviews will give you crystal clear insights, budget highlights with real impacts, short-term and long-term growth effects, top stock picks, and 2 missed opportunities that could have made history. If you are a student, IB aspirant, investor, parent, or just curious about your future, this is for you. Hit play, grab notes, and let's decode rupees 53.47 lakh crore of destiny. Budget points in a nutshell. Who wins? Who pays? Budget 26-27 totals. Rupees 53.47 lakh crore worth of expenditure, up 7.7% from last year. Fiscal deficit 4.3% of GDP. Disciplined yet growth focused. Here's a breakdown explained like a family budget. Mega infra push, rupees 12.2 lakh crore capex. Your new highways and trains. What? 7 high-speed rail corridors, 20 new waterways, Tier 2, Tier 3 city infra, rupees 5,000 crore per city economic region. Impact for you? Imagine driving to Grandma's village in 2 hours instead of 6. Jobs boom. Logistics cost drop 20%. Stakeholders? Construction workers, plus 1 million jobs. Real estate developers, land values up 30%. Logistics firms, profit margins plus 5%. Even a 5-year-old gets it. More roads mean faster toy deliveries. Manufacturing revival. Strategic sectors get rupees 10,000 crore boost. What? Container manufacturing, construction equipment, legacy cluster revival, 200 sites. Semiconductor ISM 2.0, biopharma hubs. Impact MSMEs as champion suppliers, 10 million jobs. Stakeholders, factory owners, export up 25%. Worker salaries plus 15%. Exporters, global edge. For kids, like giving your toy factory superpowers to beat China toys. Services and IT boost. Digital India 2.0. What? IT services incentive. Global sports goods. Ship repair schemes. Impact. TCS Infosys margins improve 2 to 3%. Stakeholders. Techies. Campus hires up 20%. Startups. Funding flows. Simple. Your dad's computer job gets safer. Tax reforms. Middle class relief. What? TCS cut to 2% on remittances. STT hike on FNO 0.02 to 0.1%. New income tax at 2025. ITR deadline extension. Impact. Students, NRIs, save rupees 5,000 per year on overseas study loans. Stakeholders, salaried class, take home plus rupees 2,000 per month. Traders, FNO discipline. For kids, more pocket money for ice cream. Green energy and defense, long-term bets. What? Rare earth minerals, clean energy exemptions, big cat summit, ecotourism. Impact. Defense spending up 10%. Stakeholders, farmers, irrigation schemes, tourists, jobs. Analogy, planting money trees for tomorrow's fruits. Bottom line, winners, infra, manufacturing, MSMEs, losers, FNO speculators. Middle class gets breathing room. Short-term growth impact, fuel for 7% plus GDP rocket. This budget is short-term nitro for India's growth engine. GDP boost, capex at 12.2 lakh crore, 1.2 to 1.5% direct GDP multiplier via construction jobs, 2 crore mandates created. FY27 growth projected at 6.8 to 7.2%. Real world wins, jobs explosion, MSME schemes plus infra, 5 million direct jobs in tier 2 cities. Your cousin in Patna gets a factory job, not migration to Mumbai. Consumption on fire, tax relief puts 50,000 rupees crore extra in middle class pocket. Think Diwali sales up 15%, auto sales boom. Corporate cheer, lower TCS boost remittances for education, tech. IT hiring up 10% Q1 FY28. But caveats. STT hike curbs, FNO, frenzy. Good for markets, bad for gamblers. Fiscal discipline caps populist spending. No freebies overload. How to explain it to a kid? Budget is like adding turbo to your bicycle. You zoom faster to school tomorrow, but you still pedal hard. Markets reacted. Nifty up 1.2% post-budget, infra stocks plus 5%. Long-term growth impact. Building the $10 trillion India. This isn't a sugar rush. It's a foundation laying for Viksit Bharat. Vision 2047 roadmap. Infra multiplier. High-speed rails connect 50 cities by 2035, GDP plus 2% annually via productivity. Like China's rail boom added 1.5%. Manufacturing leap. Container schemes makes India number one exporter hub. PLI 2.0 extends to 2030. Manufacturing share from 17% to 25% GDP. Tier 2 boom. Rupees 5,000 crore per CER unlocks 100 new growth pools. Think Indore, Pimpri as mini Bangalore's. Real impacts. Youth dividend. 10 million MSME jobs by 2030. Unemployment down to 5%. Your daughter studies local. Gets job nearby. Export powerhouse. Ship repair plus textile. Rupees $100 billion exports addition. Rupee strengthens to 80 rupees per USD long term. Green future. Rare earth, secure EV or AI supply chains. India becomes battery capital like China's rare earth dominance. Challenges ahead. Execution risk high. 50% schemes historically underdeliver. Debt at 58% GDP needs watching. 5-year-old version. Budget plants a magic seed. Water it, execute well, and it grows into a giant tree with fruits for generations. Top equity sectors to invest. My IB picks. As a former investment analyst, here's where smart money flows. Sector 1. Infrastructure and construction. Buy target plus 30%. Why? 12.2 lakh crore capex, order book explosion. Picks. L&T, PE 28x, ROE 18%. IRB Infra, impact toll revenues up 20% as highways multiply. Sector 2. Manufacturing, capital goods. Strong buy, target plus 40%. Why? Container, equipment schemes. Import substitution. Bharat Forge, Cummins India, shine. Picks, BEML, construction equipment monopoly. Mazagon Dock, ship repair. Sector 3. MSMEs and industrials. Buy, target plus 25%. Why? Champion MSME scheme. Revival Polycab. Apar industry. Cables for infra. Real edge. Government procurement preference equals 20% revenue jump. Sector 4. Defense and railways. High conviction. Target plus 50%. Why? High speed rails plus defense push. RVNL. IRCON order wins galore. Picks. BEL. Bharat Dynamics. Avoid pure FNO plays. STT bite. Watch. IT services boost, but capex more than services long term. To explain it to a kid, buy shares of companies building roads and trains. They are like owning the toys everyone wants. 2 missed opportunities. What could have made history? Miss 1. Universal Basic Income Pilot. Rupees 1 lakh crore allocation. Why? Historic. Test UBI in 100 poorest districts. End poverty traps. Boost consumption 15%. Global template like Alaska Fund would have catapulted India's to welfare superpower. Miss 2. AI Quantum National Fund. Rupees 50,000 crores sovereign wealth. Why? Game changer. Seed India's open AI equivalent. Attract global talent. Leapfrog China. Instead of PLI scraps, a Musk level bet. These omissions keep India good, not great. Final takeaway, a solid 8 to 10 budget. This budget 2026 to 27 scores 8 on 10. Disciplined, infra heavy, manufacturing focused. Short term, 7% growth accelerator. Long term, $10 trillion foundation. My prediction, Nifty to 28,000 by Diwali 2026 if execution delivers. You're not just watching, you are investing in knowledge. Like, comment your top sector pick, subscribe to Bankers Bootcamp for weekly breakdowns. Share it with that friend for prepping interviews. This is where finance meets your future. See you next time.